This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. This is Not Your Advisor with NYU Grad on Thursday, October 17th. Let's just jump right into this. Let's not beat around the bush. I want to cover like a quick snapshot on what the financial media is not telling you or showing you. And I'm going to give you proof. Also, gold, congratulations, new lifetime highs as well. I think a good analogy for what we're seeing is the story of Icarus. And I will post, for those that don't know about the mythology, I'll post a quick, brief TED Talk that talks about Icarus and his father, who were basically put in jail. It's a good story, but when you always hear folks talking about flying too close to the sun, this should give you a very good summary of the background of the story. I just want to urge everyone to be fearful when everyone is greedy. It is a time to be very cautious with your wealth. You worked hard to save it, to earn it, to acquire it. And not many people are talking about what's going on in the media. So since the market absorbed the 50 basis point cut news on September 18th, we've been making new lifetime highs on the SPY, on the Dow, and every day or every other day we're just taking higher and higher and higher. And for those on the premium side have known, because I've been posting incessantly about it in the private chat, but I thought I'd show you just with today's action as proof. So if you take a look at the screenshot here of in the show notes, you have the ES futures contract from September 21st to today. And you'll notice the when you see the ES with lack of volume in between the day sessions, that's overnight. That's when you and I in the US are sleeping and the international markets are open. If you take a look at it, 90% of the time during the overnight session, the markets are either rallying or they sell off and they magically get defended between 4 and 5 a.m. New York time. And during the cash session, when the markets are open, it's like maintenance mode. It's either rallies in the beginning of the day and then sells off at the end of the day, or it just kind of putters along sideways, waiting for the next overnight session when they can ramp it again. Rinse and repeat, rinse and repeat. That's all that's been going on since September 18th. And if you take a look at the near-term view of last night and today's session, this is the close-up shot. You'll see during the Thursday wee hours while we sleep, there's obviously very little volume on the ES futures contract, so we gap, we pump higher. And lo and behold, look at that. At the open, there's volume. Red bars, we sell off, and then it stops the bleeding, and we maintain throughout the day. And then if you go to the next chart, you'll see that I've circled the volume spikes. Each volume spike, you see red bars selling. When you see declining volume, it's just maintenance mode. And I wouldn't be surprised if tonight we see the same thing. We're going to potentially rally with no volume while we sleep, and tomorrow will be the Netflix earnings or something like that, and we'll gap higher at the open, and then we will either trade sideways or sell off into the close, rinse and repeat, making new highs ever so often, every 2 days, every day, every other day. This is the plumbing of Wall Street selling at the top. This is the very definition of it. And I'm going to ask you again, Does Wall Street sell at the bottom and buy at the top? No. We do that. They don't do that. So let's take a look at the close. The NASDAQ futures, the ES futures, looks exactly the same. Low volume melt up, sideways action, and when volume spikes, they sell it. ES futures, same exact thing. NVIDIA, same exact thing. NVIDIA closed at the lows. So do what you will with this information. Maybe I'm crazy. Maybe I'm the crazy one. But hey, you know what they say about crazy people? We're typically just the first. So I did want to give a very big shout out to paying subscriber TMacro06. Not only has TMacro06 upgraded from being a free subscriber, he wrote me a very nice testimonial. So while I was thanking them for upgrading from free to paid, they replied, quote, "I wouldn't have if I didn't think it was worth it. With all the great work and insight, your efforts are must read for anyone following markets. Not only that, but your voice reminds me of your favorite trader over the years. So despite working mostly alone, your daily recap brings me back to the trading floor. I add that your interaction with followers says it all, top shelf. I hope to start posting my own soon. And I'm a long-time hedge fund fleece vest guy, mostly trafficking in commodities and equities. Thanks again." Well, TMacro06, I can't wait for you to start posting content so I can subscribe and return the favor. Thank you so much. He also sent me a book recommendation as well. You can actually download the book for free. It is written by Garrett, cool name, in the 1930s, right during the Great Depression and crash. The title of the book is The Bubble That Broke the World, and I'll post the link to the publisher where you can curiously download the entire book for free as a PDF. You can also get it on Kindle for 99 cents on Amazon, so check that out. That's all in the show notes. What else stuck out today? So just real quickly, I'm going to cover breadth, but the things that really stuck out to me was the low volume. There was only 31 million shares traded on the SPY. And the 10-year yield is above 4%. It's close to 4.1. So looking at breadth, we had 993 new highs, 97 new lows, 41% of stocks were advancing versus 55% declining. 33% of stocks were below their respective 50. 32% of stocks were below their respective 200. Taking a quick look at the NASDAQ, we had 116 new highs versus 29 new lows. So pretty bullish day, right? Like the Dow was up 161 points. The NASDAQ was up only 6 points, and the S&P was down a mere 1 point. But the NASDAQ and the S&P closed near the bottom of the session. There was no volume to speak of. And when you take a look at the sectors, technology led. It was up 0.79%. Energy was second place, up 0.46%. Financials were up 1/3%. Basic materials up 0.2%. The rest were all red sector-wise. That's like the summary of the session, folks. I will cover what was strong, what was weak in the S&P 500, as well as the NASDAQ. Give me one quick second. I want to update the grid here for real-time data. Looking at the S&P 500 for the session. Let's see. I'm going to sort this. What was green? Snap-on up 9.9%. Travelers Insurance up 9%, Blackstone up 6.2%, M&T Bank 5%, Expedia 4.7%, Humana 4.2%, Steel Dynamics 4, Textron 3, Chubb 3, Broadcom 2.6, AIG 2.6, Micron 2.5, Nucor 2.4, Vertex Pharmaceuticals 2.3, Hartford Financial Services was up 2.2. In the NASDAQ, on the upside, you had in the NASDAQ, Micron up 2.5, Broadcom 2.6, ASML Holdings 2.5, CoStar Group up 1.4, and ARM Holdings up 1.38. To the downside, in the S&P 500, you had Molina Healthcare down 12.5%, Elevance Health down 10.5%, Centene down 9%, CSX, down 6.7%, Vistra Energy down 6.2%, Erie Indemnity down 5.9%, NRG Energy 5.7%, Moderna 4.5%, Walgreens 3.7%, JB Hunt 3.7%, Lululemon 3.5%, Trust Financial 3.5%, Crown Castle 3.4%, Equifax 3.3%, Generac Holdings 3.3%. In the NASDAQ, to the downside, you had CSX, Moderna, they're all part of the S&P too. Lululemon, part of the S&P. All right, PDD Holdings 2.96 to the red, Discovery 2.7%, MongoDB 2.3%, Marvell 2.1%, Netflix 2.05%, KLAC Corp down 1.8%. So for free members, continue to stick with the macro. Focus on the forest, not the trees. Obviously, we're in earnings season. Friday, we have right now, after market, you have Netflix reporting, but Friday, before the market opens, you have Amex, Schlumberger, Ally Financials, and next week is really the heavy hitters, like a lot of the tech names. So that's going to definitely move the markets, but more than earnings, you want to focus on the Mag 7, you want to focus on yields, and just macro right now. I will see you all after the Friday session. Premium members, please stay on. I have a lot to cover today. That's my train.
Stand clear of the closing doors, please.